What's up, traders? So, welcome to part three, basic technical analysis. Um, the first part, or the first video of this series, we're going to be talking about candlestick patterns. Now, candlestick patterns is an iffy topic for me, only because I don't really use them anymore. If they happen in alignment with the rest of my analysis, then of course it's like an extra confirmation. But candlestick patterns are really relative, right? It really just depends on your broker and certain things, and to me, they're not very reliable all the time. Now, if, like I said, if they're in conjunction with a lot of other confluences and a lot of other things that I've already analyzed, then yeah, it's an extra confirmation for me. But I mean, alone, they hold no value to me. But I want to teach you guys, a little bit about them, so at least you have some kind of foundation on candlestick patterns. Since you've already learned about candlesticks and the data they provide, these candlesticks also form patterns that have been known to repeat themselves, um, and kind of give you a little edge on your analysis, right? So one I really want to focus on is this bearish engulfing, right? So the engulfing patterns, out of all of the patterns, I've noticed that the engulfing patterns would be the most reliable to me, as far as signaling a change in trend or whatever is going on, right? So what I'm going to do is show you guys an example of an engulfing pattern on a chart and what it kind of means. Okay, so as you see here, price is moving down. Okay, and if we were looking for a place to enter, now I'm not, this isn't how I necessarily analyze a chart, but I'm just, giving you guys, general information. Of course, there would be a lot more to this on analyzing chart, and you guys will learn that in more lessons. But I'm just, laying basic knowledge down as far as basic technical analysis. Okay, so here we have a price chart, and let's imagine that all this doesn't exist. Okay. Let's make this a little wider. Having a little trouble here. All right. Okay. So price is moving down, and let's imagine we're looking for some kind of signal to let us know that price is going to continue down or go up or whatever we're looking for, right? So let's imagine you're looking for, some kind of candlestick pattern. All right. So price is right, so the candlesticks are forming, right? And this is what I'm talking about as far as not being reliable all the time, right? Right here we have a small bearish engulfing pattern, right? The green candle, not this red one, but this green candle and this red candle, right? Engulfing pattern going down, a bearish engulfing. We have a green candle and then a red candle engulfing that, being bigger, basically. Usually that's a signal that price is going to continue down. But as you see, price did not continue down. Price actually went higher than that, right? So this is what I'm talking about as these candlestick patterns being very subjective, um, things like that. Now, if we keep watching price from that point, boom, we get a really large bearish engulfing pattern there. And that's a pretty large one. And if you see, price did go in alignment with that pattern. and price continued way down, right? So if you would have entered the trade here, you would have, you know, entered short here, you would have made all this money here. So that's what I'm talking about. If you look hard enough, you'll find engulfing patterns and stuff everywhere. I mean, it's like I said, here's an engulfing pattern up, a bullish engulfing pattern. And look what happens. Price does not continue up. Price goes down still. Now, some people will say, oh, that's because we're in a downtrend. True, right? But I mean, over here we had a pattern here, a bearish pattern, and it still didn't continue down. So I mean, it's just really relative or subjective, however that's used. But I mean, there's a bearish one there, and price continued down. So, you know, like I said, I don't necessarily focus on the pattern as much as I focus on the other things that I teach, and you'll learn all that in the advanced, um, you know, technical analysis. But this, I'll put this in the files area in the trading room, you know, so you guys can see it, and then of course you can look online and look up more candlestick patterns and things like that, but like I said, candlestick patterns just aren't something that I really focus on a whole lot. But these are all the different patterns. If you're in an uptrend here and you see this, you can expect price to drop. Bullish engulfing, you expect price to go up. Bearish engulfing, expecting it to go down. Shooting stars after an uptrend. You see an uptrend and then you see one of these, it may go down. It's kind of similar to the tweezers, except it's just one instead of both. But I mean, like I said, test it on your own if you choose to. I've tested it, and I don't see much value in these patterns by themselves. Now, in conjunction with other things, maybe they add some value, but by themselves, I leave them alone.